Hey guys, welcome back to my YouTube channel. I'm here with Johan Alvarez with Alterra Home Loans, and we are going to talk to you about whether or not you can afford buying a house in Cary. We've done another episode, by the way, on that subject, and I was talking about rents, but today I want to be a little bit more specific with Johan and really dive deep into loans, affordability in different price points, right? So we're going to look at two homes that I recorded for you. They're both in Cary in different location, but they are both in a different price point. So one is in the 600 price point, one is in the $1 million price point, exactly $1,250,000. A lot of you are relocating, you're watching my YouTube videos, and I just wanted to give you an idea of what we're looking at, right? So both of them are in Cary. One is in West Cary, one is in the other side of Cary in Region C. A lot of you also, and then I'll leave it all to Johan, a lot of you think that by coming to Cary, and I'm saying that in my video there as well, you can get so much house for $600,000, right? Or for $700,000. You're coming from California. I mean, of course, from a square footage perspective, right? Like you can get so much more, but in the same time, don't expect like 3 acres in the middle of Cary and so on. So long story short, Johan here is going to walk you through numbers so you can see what we're dealing with and what your payment is going to be like with the taxes that we have here. Some of the homes are going to have, of course, different HOA fees, but most of them you can count on 1% on taxes, right?
That's the estimate that we use, Yoana. And hi everyone, Thank you so much for watching again. Yoana, thank you so much for having me.
Absolutely.
What a nice studio that you have here. Thank you so much.
I know, it's a YouTube studio, so subscribe and comment. Let us know anything that you might want to know, good or bad. It doesn't have to be anything, oh my God. But if you have questions, my information is going to be there. Johan's information is there. We've been doing this for 10 plus years, served hundreds of clients. So we are a really good resource for all of you guys. Okay, let's dive right in.
So Joana, the idea of this is just to give an example. You know, this is not an offer to lend. I just have to put that out there because the numbers may change. These properties may or may not even be available by the time that they're watching this video. So
exactly.
This is just to give you an example. And yeah, Joana, just to answer your question, we estimate about 1%. In some areas, they may be a little bit higher, maybe a little bit lower, just depending on the county. But on average, we're at about 1%. So that's the estimate that we're using. Now, we do have two properties here that we're going to look at, which will give us specific numbers. So the numbers that we will review are specific to two properties. One of them, Joana, you did a walkthrough. I think you did a Facebook Live, so you can probably find that video there and take a look at the home.
We actually did both.
You did both?
So
okay,
I did
great.
both, so you can see the 600 versus 1.25, what you can get, and we're going to put some of the footage there so you can just kind of take a look. Yeah.
And I think the biggest difference for many people that are coming from a more expensive location could be the payment. So we're talking about $1 million home here compared to another state where maybe the property taxes are more expensive, the home insurance is more expensive, so it makes the monthly payment more affordable in this area because of on average 1% property tax is the biggest difference that I see.
Okay.
So which one do you want to start with first?
The 600,000.
600,000. All right. So I actually did some numbers for you based on a few examples. So I did a 5% down payment. I did a 10%, 15, and 20. So that gives you 4 ranges to kind of look into, depending on how much money you have, of course. You may want to do a 5%, or maybe you could do a 20%. So the numbers will be different, but I think it's pretty interesting to see what the differences are. All right, so again, disclaimer, this is just an example here.
And we're not selling you guys on anything. We're just letting you know what the stats are.
My NMLS number is 167979, so I do also have to let them know about my license number. I am licensed in the state of North Carolina.
Okay.
And let's start with the first one. So 5% down, $30,500 based on a price of $610. So that was the ask price.
Right.
We know that properties may sell for a little bit more, but let's assume that it's going to sell for $610,000. So the 5% down payment is $30,500. You're going to borrow $579,500. The principal and interest is $2,683.75. We have mortgage insurance. So the mortgage insurance can vary depending on your credit score, but let's assume you have great credit. 101.41 is the monthly mortgage insurance. Property tax, $314.37. So the annual property tax on this specific home is $3,772.44. And then insurance, we're not sure how much your insurance is going to ultimately end up being, but let's assume it's $100 or $1,200 a year. We're looking at $3199.53, so about $3,200 on this $610,000 home, 5% down. With closing cost, you will need about $7,100, $7,200, so you'll need about $37,684 is the total that I calculated. So your interest rate, or right now the market rate, is about 3.75. APR is 3.928. So that's the current market right now. It doesn't mean
and that's for a primary residence.
Primary residence.
Yeah, and keep in mind, Johan, we were talking about this. If you want to buy it as a secondary home, the rate is going to be different.
Right. So second home investment properties rates are higher, and I was telling Yoana as I was coming here that second home interest rates are adjusting. Many lenders have adjusted them already just because of some changes that have taken place with the investors, but you're definitely going to get a better interest rate if you're purchasing a primary residence compared to a second or an investment home. So that's a great point, Yoana. This is based on a primary home example.
Right.
So let's go with 10% down. So $61,000 for your down payment. Your loan will be for $549,000. Monthly payment would be principal and interest $2,542.50. The mortgage insurance is less expensive because you're doing a higher down payment, so $73.20 a month, again assuming that you have excellent credit. Then we have the same property tax, same insurance, total payment $30.07 was the example that I came up with. So your payment goes down, let's say $200, so around $200 if you're doing 10% instead of 5%. But you will need $61,000 for your down payment, about $71.81 for closing cost, so a total of $68,181. So about $68,000 compared to $37,600 on the total expense. Same interest rate, 3.75, APR 3.877%. So that's the 10% down.
I know we don't want this video to be very long, and we're gonna keep the other examples a little bit shorter, but I want you guys to understand the difference between what's an APR?
Yeah, so APR is the annual percentage rate, and essentially it's your total cost of financing. So the interest rate is the rate in which you're gonna pay back the principal loan that you're getting, but then you have closing costs that you have to add on to that interest that you're paying on the principal loan. So it's the total cost of financing. The lender's not going to do the loan for free. There's going to be an appraisal fee. There's going to be an underwriting fee, an application fee, interest, prepaid interest, items that if you were to buy this house cash, compared to financing, there's additional costs that you're going to have because you're financing the loan. So usually what the APR will tell you is how expensive the closing cost to finance this home is, and the closer those two numbers are, the better it is for us as consumers, and the farther away they are, the more expensive
you're paying more. So
your closing costs are.
You can ask a lender, why is my interest rate here and my APR different? So that's just a little bit of a bonus for all of you guys watching. All right.
And you know, just Yoana, just to reinforce this, you know, sometimes another lender, you know, an online lender or just another lender in general will advertise a lower rate, but what they're doing is that they're adding additional cost. So when they advertise an interest rate, you'll notice that the APR, the spread between both is much wider.
Okay, so then let's just go to the last examples for the $1 million home, or no?
I have two more. I just have two. I'll make it very fast. So 15% down, so $91,500. Your loan will be $518,500. You will have mortgage insurance, but principal and interest will be $24,0125. The mortgage insurance, again, it's cheaper, $47.53. Same tax, same insurance. Your total payment is $2863.15. So the total that you would need with closing costs are going to be about the same, guys, because most of these costs are fixed expenses. No matter how much money you're borrowing, your bank fees may be the same, the appraisal fee may be the same, attorney will be the same. So a lot of these costs are fixed. So we're looking at $98,678. Same interest rate, 3.75, APR 3.834%. So about $98,000 needed and $2,800 on the payment. 20% down, a little simpler because you won't have mortgage insurance. Let's assume it's the same 3.75 interest rate. The APR is 3.798. You're putting $122,000 as your down payment. You're borrowing $488,000. Your principal and interest is $2,260 plus tax plus insurance. You're looking at about $2,674.37.
So you're not paying PMI here because
you're not paying PMI
because you're putting 20% down. So we started at 5%, 10%, 15%. All of those had the PMI, and now once you don't have a PMI, you see the difference between 5%, 20% is fairly significant there. Right. So this is just some quick examples, so you guys can you can stop the video. We'll put some numbers, we'll throw some numbers there for you guys to see what's your payment depending on the percentage. And you can go and you can check these payments on Zillow or any of these apps, but ultimately a lender can actually give you the details on the APR rate, all these costs, insurance, and it's a little bit better for you guys to connect with a lender versus just looking on your own, because you might be missing things and you might think you can afford to buy something, but the reality might be a little bit different, okay?
Yeah, and some items here are sensitive to your credit score. So
yes.
That's the important thing.
Yeah. So how about we go into the 1.250, so 1,250,000.
All right, so now we're in jumbo territory. Because you're going to be borrowing more than $647,200, that is going to be considered a jumbo loan. What that means is that this is not going to be sold to an investor like Fannie Mae or Freddie Mac. It's most likely going to stay in the bank's portfolio. So the options are probably going to be limited. The requirements may be significantly different between one lender to the next. But I'm just going to go over quick numbers. With jumbo loans, you may have to put at least 10% down. So I have two examples for you, one with 10% down and another one with 20% down, which is the most common one. So if you're doing 10% down on $1.25 million, you're looking at $125,000 for your down payment. The interest rate may be a little bit higher, so I'm assuming it's going to be around 3.625, 3.75 as the APR. You're looking at principal and interest payment of $5,130.58. On this specific home, Yoana, we were looking at a tax of $699.30. On an annual basis, it's $8,391.60. So right there, you could see that the tax is actually less than 1% of the sales price of this home. Total payment is $6,029.88. I'm assuming that the insurance is going to be higher compared to a lower priced home, so I'm assuming that it's going to be about $200 a month. But again, it could be less, so you're going to find your own insurance company. So if it comes out to be less, that'll save you some money on your monthly payment. With this example, Yoana, you will need close to about $10,000, $11,000 for total closing costs. So your total out of pocket would be $136,000. Now, if you have a little bit more money to put a higher down payment, you will get better terms as far as interest rate. You will get a better rate. So 20% down, you would need $250,000 for your down payment, and plus the closing costs, you're looking at a total out-of-pocket expense of about $261. So definitely more money that you would need for this example. And interest rate approximately 3.25, APR 3.375. You're looking at a principal and interest payment of $4,352.06. Same tax, $699.30. Same insurance, $200. Total payment is $52.51. So that's the range, $52.51 compared to $6,029 on the payment, but you do need a lot more money for 20% compared to 10, and that's how much the payment will be on a $1.25 million home.
Yeah, and as you will see in the videos, the home that I'm showing you guys is an excellent home in great condition and amazing location in Regency, next to Coca Booth, next to Whole Foods, next to all of the the hospital, Wake Med. So very, very well-known location for Cary and sought after. They're actually under contract already. So I did a video a couple of days ago and we didn't get a chance to get together to do this for you, but it's gone. So I think that's about it. We are going to give you the examples on the screen, as I said, and with any questions, just connect with me and with Johan so we can advise you on loans, on how to win an offer here in North Carolina. And thank you again for watching. Please subscribe. Look at the other videos that I have regarding affordability. We do post 2 videos, and we are here to update you on everything numbers related, market related, shopping, restaurants, housing, whatever, schools. We're both parents, and we've been doing this for a long time. So thanks again for watching. Thank you so much, Johan.
If you have any questions, reach out. Thank you so much, Yoana.
Yep. Take care. Bye.